Hello everyone, welcome to the therrratio where we focus on chart-driven technical analysis. Today's video is about insights hidden in Bitcoin's moving average. The first thing which I want to show when it comes to moving average is the two common ones, and those are 50-week moving average and 200-week moving average. It is the narrative which has been formed over the years where it is seen that Bitcoin is in bear market, confirmed bear market, when price crosses 50-week moving average, after which Bitcoin continues to stay in the moving average up until it touches the 200-week moving average. After that, it stays on 200-week moving average for a couple of weeks, and then it starts its next bull run. We saw this in all of the previous years, that price, when it crossed 50-week moving average, it continued to stay under it until it had touched 200-week moving average. And then whenever the price went above the 50-week moving average, that was when the next bull run was confirmed. Of course, this does not tell us exact bottom or exact tops, but it gives us some sense of the trend in that particular year or time frame. Now, these are some of the simple ones, easy ones, which a lot of time can create false narratives, or let's say not the false narratives, but it doesn't help us with entering and exiting Bitcoin's price near to the top or near to the bottom. It only tells us where the trend is going. So what I have here is I added, instead of 50-week and 200-week moving average, what I have is, for comparison, 50-week for high, 50-week for close, and 50-week for low. And these are quick moving averages. Now, what does quick moving average mean is, if the price is in trend, upwards trend, it will tell us by highlighting the moving average with green, and if it is in downtrend, it will tell us that it is in the downtrend. Now, why do I have high, low, and the close? The reason for that is we need to somehow accommodate some market structure in the moving average. Typically, moving averages, they do not incorporate any form of market structure, because they are only based on the close. Well, they do have that, so there is some market structure in the moving averages, but now we want to include more information. So here, by having the low, close, and the high, it tells us that when the price reaches to the close, or if it closes above the lowest of the moving average, we have already passed the accumulation, or we have already passed the bottom of the Bitcoin. This particular crash which happened in 2020 perhaps was because of the corona crash, flash crash, but in a typical 4-year cycle, whenever the price crossed the low of the quick moving average, so quick EMA, the Bitcoin's bottom for that particular cycle was already in. Basically, the bear market, this signals that bear market is over. Of course, one cannot catch the bottom if we are following just the moving averages, but it adds to the confluence of the analysis which tells us, all right, I am out of the bear market, the bottom has already formed, and now I want to start moving in the trend. I want to start taking positions which would be going in the next bull run. Over here, we had this first close. One could have entered here, but then there would be a flash crash here. But let's say if a person is not trading, if one is investing from and looking from a 4-year cycle point of view, then this would have been a good potential entry thinking long term. Then another good entry would have been over here. So this too would be good point to DCA. During the bear market, when the quick EMAs are red, we see that, or not red, but when the price is under the quick EMA, it's better to not go DCAing, because the chances of losing on that DCA are much higher. The risk to reward ratio doesn't add up, because someone is taking a risk at this point or at this point thinking that we are back in the bull market, but the reward is not favorable because the trend is still going downwards. At first point when I would like to take the risk when QEMAs are still red is when the price crosses the QEMA with low as the point. So here the first one, or the lowest one, is the low, which is this one. So if it crosses the low, that means I have broken the structure where it was basically taking into consideration the lows of the last 50 candles. And once it has crossed the high, that basically tells us the break of market structure from the last 50 candles, just the high of the last 50 candles. It's an average, so it's an average break of, it's a break of structure of the average of the highs. For today's value, so here, if we take the same logic, this would give us a wrong entry. So here it would tell us that close is above and bottom is in. And that's why trading purely based on moving average is quite a difficult way to DCA. And this part can be, of course, like always in all my videos, or almost all of my videos, I always make sure to tell accumulation and distribution lines. Now, if the price has crossed the accumulation line and then the price touches the low of the QEMA, then I'm pretty confident that my risk to reward ratio is in my favor. That means my rewards are going to be higher than the risk I'm taking. I want to bring in another moving averages, which tell a bit of a different story. It is not good for, let's say, entering, because let's say they signal the long entries and short entries pretty late. So here the dotted ones are volume weighted moving average, and they act as a pretty strong support and pretty strong confirmation, but the confirmation happens so late that one might miss a move of almost, let's consider from here, almost 46%, and if you consider from the bottom, the move of almost 88%. But it's not just about this one moving average. They do tell us a very good signal that, all right, I'm still in the uptrend, whereas the EMAs might once in a while tell us that the downtrend it's been done, because it turns out that all three EMAs become green, and this gives us a wrong impression. Here it tells us that we are back in the bear market, and that gives us a wrong impression. On the other hand, the volume weighted EMA, they are less they are less reactive to the noise of day-to-day or 1 week to other week fluctuation, and they signal the trend after it has been properly confirmed. One good entry point, re-entry points would be whenever the price touches one of the moving averages here. That would be a good point to re-enter the market and go for the next rally up, because they act as a pretty good support, taking into account the volume as well and not just the price action. There is one special moving average, which is TEMA, that's triple exponential moving average. And what I really like about these TEMAs are they are super reactive, but if you analyze it well, then they tell us the entry very close to the bottom. So the first and foremost thing which we have to always keep in mind is that price must cross the accumulation line. If it has not crossed the accumulation line and price touches or closes on the quick EMAs or quick moving averages, it does not indicate the bottom is in. But once the price has crossed the accumulation line, look at the TEMAs. So now price has crossed. It shows that all three TEMAs have turned green. That's a good point to enter. Now here it again shows that we are in downtrend, but it doesn't matter because we have already crossed the accumulation line. Once price crosses here, this region, this whole region of 3 years, that's our bull market. So every time price touches the moving averages, it is a good point to enter. And this is very close to the bottom. The bottom was somewhere here, or you can also mark here. These are all very good accumulation period. And this has happened in all of the previous years. Here, the bottom was on December 10th, and TEMAs showed the first green on this particular candle, which was after a few months. So you would have missed the bottom, but at least that would be a pretty strong confirmation that bottom has been already past us. It's already past us, and we are now in the next bull market. It is a very similar story here. The first one was at this candle, and every single pullback to the EMAs or even below the EMAs, since we are in bull trend, has been a good re-entry point. TEMAs can be seen as good short entries, where whenever there is a first green dot in between the distribution and accumulation line, they are good points to take a short. And right now, we are not seeing any of the bottoming price action because we are not yet on the other side of the accumulation line. If we look at, let's say, other EMAs, so TEMAs are good for that. If I look at, let's say, RMAs, they are incredibly slow. They are incredibly lagging moving averages, because you see the price has already crossed the distribution line, and it indicated that we are still in a strong uptrend, which could have happened, which would be good in cases of the year of 2021 and 2020. So basically from 2020 to 2021, because here this was a huge drop from the all-time high. This was almost 50%, 53%. But since RMA indicated that we are still in the uptrend and we have not crossed the distribution line, we were almost 5 months away from the distribution line, it gives us the confidence that I can re-enter over here and price will still rally up. Of course, but you have to be careful that price, once it has crossed its distribution line, forget EMAs for taking long entries, because then we are in the bear market. So right now we are in the bear market for the year 2026, and we are not that far away from the accumulation line. We have, this week is almost over, so we are all right we are going to be in 7 weeks, so approximately 49-50 days, we will be crossing the accumulation line. And the exact date for the accumulation line is 27 September. That is basically the start of the last quarter of this year. And I think we will most likely bottom in October, somewhere between October and 15th of November. Because every time price has crossed the accumulation line, we have seen the drop and then a short accumulation period for a few weeks. And after that, we are back in the bull market. If you like the analysis, then do hit the subscribe button, and I will see you in the next one. Bye-bye.